Because even though affordability's dropped 20%, doesn't mean you need to see a 20% decrease in the property value to have a good deal from that perspective. So if you bought in May and you needed to borrow $1 million, and let's assume there was a 10% decrease, so today you need to borrow $900,000. Because mortgages are done over 30 years, if you were to look at the numbers after 5 years, so the 5 years of your mortgage, you're pretty close. So if you can afford these higher payments due to these higher interest rates, you are going to pay more on a monthly basis, but the mortgage at the end of 5 years is going to be proportionately pretty close. So, you know, people that are waiting for this 20-25% decrease to come through, you know, the numbers start making sense even if the decrease is only 10%. Obviously more the better, but that's what the numbers tell us.
So let's go through the actual numbers because I think it would be helpful for people to see the breakdown of how this works. So can you show us?
So if you were to borrow $1 million in March of this year, you're paying about 2.5% as the interest rate, just as the average rate at that time. Your monthly payment would be about $4,000. And your mortgage after 5 years, let's say, would be $880,000. So you've paid down about 120 grand of your mortgage. But prices have dropped about 10% now.
Yeah.
So let's say you borrowed $900,000 today at a much higher interest rate, so 5.6%. Most noticeable thing you'll see is that your payment's over 5 grand, so about $5,100. But at the end of the day, your mortgage balance after 5 years is going to be $832,000. So if you take the increase in your monthly payment every month, which is about 60 grand, you know, that's a big number over 5 years. But the amount that you've paid down the mortgage, proportionately, they're pretty close. So, you know, there's about a $10,000 difference over 5 years on a lot of money that you're borrowing. So, you know, waiting for this 20-25% drop in real estate prices, you don't have to wait that long to see that you can still get some good value with a 10% drop.
So you're almost in as good of a position right now than you would have been in March.
I would say the big thing is if your cash flow can handle it, right? Like there's still good opportunities in our market.